We really have a pretty strong fundamental view of the economy at the moment, and that's worth revisiting. In addition to that, there were probably a couple of technical factors last month that made things kind of soft that we're expecting a little bit of a bounce back for. I will say, going forward, one of the things that we're worried about that might make all of this discussion about whether or not there are enough workers perhaps a bit moot is the escalating trade war. We think that we're going to see the next round of tariffs on another $200 billion of Chinese goods get announced in the next several days. And if they have the economic effect that we think they will, that could lead to a pothole in the fourth quarter. Well, we think GDP, for example, is going to slow down from the 4 something that we saw in the second quarter. We have an estimate of 3% in the third quarter. We think it's going to slow all the way down to 1.6 in the fourth quarter. So a pretty substantial slowdown. And as a result, job creation is only going to average something like 150,000 per month in the fourth quarter.
Why do you think that is? And I don't want to get all mathy at this hour, but here's the thing. And I know the numbers sound scary, right, on 200 billion, but let's call it 25% on 200 billion. That's 50 billion plus the 25% on 16. So it's 4. So we're talking $54 billion maximum economic impact. The average American uses 50 gallons of gasoline per household per month. So if the price of gas rose 75 cents a gallon, wouldn't that be more of a net negative impact on the economy than these tariffs? You see,
sure.
I'm not minimizing the tariffs, but what I am saying is if you actually do the math, reduce the number down to the worst case scenario, divide that by the number of working households in this country, the numbers aren't big. They're not big.
I don't disagree. On the other hand, what we do know about the economy is part of the strength in the economy now is manufacturing. A lot of those firms are brand new firms, and all of the data will tell you that at a large fraction, 10, 20% of new firms fail in the first year, partly because they hit a cost shock that they're not anticipated and don't have a capital buffer. Well, these tariffs are going to be such a cost shock. So if a bunch of the new firms, the ones that are creating these new jobs that we see, hit this cost shock, aren't ready to absorb it, and they go out of business, that's a pretty nonlinear effect on the economy.